I think ultimately what retail traders should mature to, when they mature to, is they become really good at prop. They get to the funded stage. They maybe even get paid out a few times. And then they also transition to their own account where they have a little bit more flexibility with capital, but they've now learned these really, really great techniques. And it's completely different. People go to me, oh, couldn't I get this done on a demo? No, because the reason why demo doesn't work is because there is no payoff.
Welcome everyone, hope you're doing fun. Today we have a good interview for you. Sitting down today with Boris Schlossberg, who is a full-time scalper, trading prop firms account at the moment. He's one of the very few guys I know who's actually good at scalping and really doing it full-time and proving it on YouTube also. The guy is trading very short time frame, always the chart pretty much, always taking trades, and always talking about the things he's trading. He's definitely a good person to learn from. But before we jump into this episode, if you want to actually learn about scalping and understand the mindset behind becoming a good scalper, we have a training we've done a few months back. One of the trainings we keep only for students. It's about really focusing on the psychology of scalping. It's totally free. Covers some things that are not really talked about much in the interview, but that could make a big difference in your results in trading. So if you want to see the behind the scenes of actually scalping and really mastering your mindset to be able to do it right, check out the first link in the description. It's going to be taking you there. It's a free training. It's advanced stuff that one of the scalpers on the team covered. I hope you like it. And with that being said, we'll jump right into the interview. Sitting down today with Boris Schlossberg. It's going to be fun to talk about his trading, trading for prop firm, for scalping futures. It's going to be a good talk for sure. So Boris, welcome back on the podcast. We had you many times, but welcome back once again.
Hi, it's great to be with you. Good to be back at the best trading podcast ever, Desire to Trade. How are you, Etienne? Good to see you. Great to be back.
It's awesome. Doing good for sure. I want to kind of get an idea of what you're doing these days and what you're focused on. You mentioned you trade prop firms, but tell me more about kind of what that looks like.
So I've really changed my whole trading focus these days. I spend all my time trading prop, mainly for our one big partner, Apex Trader Funding, and coaching, helping people pass the evaluation tests, which is been a very rewarding experience, probably the most rewarding experience of my whole life, to be able to help people get funded, then have them go on to trade. Because, prop, I think, has just so revolutionized the whole trading industry at this point. And of course, very few people are even aware of it to the extent that at how attractive it is as a proposition. That has just been a pure pleasure. It's just been really great to see so many people succeed in the game, which is a hard game to win.
You've moved in the past few years from Forex to futures. What was the reason for that move?
It's funny. I made a sort of a round trip. In the old days, I used to primarily trade stock index futures, options. And then in the early 2000s, I discovered Forex and I sort of fell in love with Forex. And, this was the golden days of Forex, 300 moves in yen, lots of macro volatility, pigs. If you go back to all of those great times when we had huge amount of volatility, Mario Draghi, Euro going from 100 to 140. So it was a really fun market for a very long time. And then I think what happened is, global ZIRP, zero interest rate policy came in, yields really compressed. I mean, Forex is very much a yield game. People always forget that Forex is really ultra short-term bonds. And when there's no yield, there was very little volatility. The game got kind of tired. And also at the same time, Chicago Mercantile Exchange introduced micro futures, which was the first time you could trade 1/10 of a large contract, sort of like $1 a point type of futures, which was a really interesting competitor to smaller size Forex trades. And I kind of started trading that on my own accounts. Really enjoyed the product. And then, of course, not at the same time, but like sometime I think around COVID, the whole idea of prop trading kind of appeared, which was the first time that retail traders could compete in the market, not with their own capital, but with the prop firm's capital, pass the evaluation test, and they have an opportunity to trade the prop firm's account. And if you were good enough, get paid out. And that was a very compelling, interesting proposition. I kind of started, playing around with it. I really enjoyed it. We got pretty good at passing those eval tests. And then I started trading it live on YouTube. And that's what I do these days. I mean, I trade live almost every single day on our YouTube channel, BK Forex. Everybody is welcome. There are days where I literally do marathon days. Like tomorrow, I'm going to do a mini marathon. Usually a marathon day is like 4 hours of straight live trading. Usually I do about hour and a half. We trade big events. Kathy joins me for big macro events, and she trades Forex beforehand, and um, I trade futures afterwards. And I think there's just no substitute for teaching than for trading live, because there's no theory, there's only practice. There's no place to hide. You make mistakes, you eat your own mistakes, you learn from the feedback of the market, and most importantly, I'm a very visual person, and I think most people are, and they only really learn to do by watching others. So it's always a pleasure, to have people watch me take trades. I take a lot of trades during my live. I'm not one of those people that takes one trade, and that's it. And that helps people learn themselves. And a lot of my students are much better traders than I am at this point, because they develop their own style against the kind of things that we do.
What's your in general training schedule looking like? Is it more like trading all the time, like during the day at any time you find setups, or do you have a specific window you focus on and then you kind of go away? Or
It's a great question, because yes, trading can become incredibly addictive and all time consuming. And it's the word addictive actually is a really important word to understand. I've been reading a lot of literature about addiction, not because I have any problems with drugs or alcohol or anything like that. I don't drink. I don't do anything, but because I actually think there's enormous amount of addictive similarities in trading, especially short-term trading. I do short-term trading only. We scalp. We do 5, 10 trades during my live session, and I can sometimes do 20, 30 trades a day usually. And that type of process releases a lot of dopamine. And if you're not careful, it really does become very, very addictive. And actually, the best psychological help I have ever received in terms of my own trading discipline, had nothing to do with all the nonsense of trading discipline literature, which none of it is scientifically valid or at all helpful. It's all really come from the addiction literature, where it tells you how to kind of change your behavior using the various things that have worked with addicts. Like, for example, just sort of a key example. Um, One of my greatest weaknesses for a long, long time, no surprise, everybody's going to probably relate to that, is I lever up. Like, you lose, you get larger. It's a really, really, really bad habit, right? Really bad habit. Almost never pays off. Even if you're correct, you're wrong in the long run, because the over leverage factor is always going to blow up your account. And one of the great advice, sort of like advices of addictive literature, is that you're supposed to go cold turkey. No matter how hard it is, you should just go cold turkey for like a day or a week or whatever it is. Like, if you have problems with alcohol, you should stop drinking for a week. If you have problems with, I don't know, sugar, you stop eating cookies for a week. Just kind of a clarity, a fast. And so I sort of did that with my trading. I said, I don't care how bad it gets. I don't care how tempted I am to lever up. I'm going to spend, and it was honestly, I set only one day as my first target, because I knew I wouldn't have the mental capacity, to do it longer. And it was even hard for my day, because remember, I'm doing 20, 30 trades a day, to not size up. But what happens as a result of that is, if you can kind of survive that small mental test, you feel a tremendous amount of lightness. You understand, oh, I could actually do this. It's not, all of the demons that trigger all of my bad behavior fall away. And then the next day kind of becomes a little bit easier. And then you're able to really, really, really apply the behavior and techniques in a much more positive way. So, all of those things were kind of fascinating as I went on my own journey. And of course, that uh, we've done a lot of those things with my coaching students, and it's really, really helped them. You sort of isolate the one absolutely worst behavior pattern that you do as a trader. And all you do is you ask yourself, I won't do it for a day, or I won't do it for a week, depending on, the length of your trading, and just see if you could just do that, completely ignoring anything else, ignore results, ignore anything else. Just see if you could do that. And then, take your own pulse and see, oh, how do you feel about that? How do you feel? Because you break that dopamine cycle. You break that, endless desire for more, dopamine. People always think that dopamine is a pleasure molecule. It's not. It's a desire molecule. So, desire to trade. It's when you break that dopamine circuit, it becomes very liberating, and you become a lot more under your own control.
Just want to take a quick moment here to talk about the mindset of scalping. Obviously, Boris is one of the best scalpers out there, someone who really knows what he's talking about when it comes to scalping. There is an aspect that I wish we covered in this interview a bit more about the psychology of it and understanding really what goes on in your mind when scalping and what really makes you a good scalper. I'll leave linked on the description here a free training. You can have a look at it, where one of the scalpers on our team goes into more depth on the mindset of scalping and a bit more tips that we don't really cover here in this interview. So cool stuff. If you want to check it out, it's 100% free. Thought it'd be valuable for you guys. I thought you would appreciate it. So go check it out, and we'll jump right back into the interview.
So, that was kind of fascinating, especially because I'm obviously, as you said, my own little laboratory rat. I trade a lot. And your initial point of what time of the day do I trade? I used to really trade, 20 hours a day, whatever, 16 hours a day, because I'm up, as you know, I'm up very early. I'm up from 4 o'clock in the morning, New York. But I really sort of definitely have started to set times. I'm not perfect yet, but I've definitely set times where, I'm going to trade, let's say, 4 a.m. to 6 a.m. and that's it. Then 9 a.m. to 11 a.m. and then maybe 15:30. I used to. It's actually a very good time to trade on the close of the U.S. market. A lot of times I don't do it because I'm kind of busy. And then I also live trade. So I have to trade live, and then I'll trade live maybe 8 p.m. to 9 p.m. 9:30. Not every day, but most days. So it went from like a continuous thing to just finding the best hours of the day when you have the highest chance of volatility, the highest chance of continuity, and trading. And I probably could do a little bit less, but yeah, it's the great thing about scalping, or the kind of approach that I do, is it's completely removed from the big moves that most traders need. So you can essentially plug in almost any time when there's any type of market movement, and extract a few points really, with precision. And if you have good setups, as we do, you can do that 4 or 5 times in a day, and you're done. It's really good. The hard part is to walk away after 4 or 5 times, because you wind up doing it 10, 11 times. And of course, the other problem that a lot of people have is the more you do it, the higher the probability you're going to give some money back, right? Because inevitably, we all know that everything is mean reverting, including your success in setups. Markets are always going to bunch up your setups really well for a while, and then none of your setups are going to work for a couple of times. So that's probably the next level skill for all of us, is to just take the winning trades and leave the losing trades on the table, right? That's it. That's all it takes to be a successful trader. But certainly, at very minimum, just trade the highest probability times of the day, and then leave the quiet hours to not participate.
I kind of want to go back to that discipline work you've done in the past, where you try to train yourself to not go back and do those bad habits. How do you now these days make sure you don't go back to these old habits? Is it like a one kind of, like you do it once and you're good to not do it forever? Or do you sometimes go back to bad habits and you have to train yourself to get out of it?
Competence breeds confidence, right? So first you have to go cold turkey from the bad habit, right? And then you see, oh, I'm not dead. Oh, my account is actually not dead. Look, maybe it took me 2 or 3 days to recover, but I was able to recover. Because really, I think a huge amount of bad habits is triggered by the fear of death, and not literal but figurative, in a sense. Oh, I'm going to blow the account if I don't do this incredibly risky high lever trade, because I'm down a couple of percent in my account. So once you sort of realize, oh, if I can just let it go, I'm not dead. I'm actually surviving, and I'm actually in better standing than I was before. Better habits become part of your repertoire, and you kind of lose the thirst for bad behavior, and you just keep going that way. I mean, the other thing is, I always say this, like I talking to my guys, I said that there's like really 3 things that I think I've distilled all trading to. Step 1 is that size beats strategy, meaning that it doesn't matter how good your strategy is. if your size is too big, you're going to lose. And it almost works in a reverse, that it doesn't matter how bad your strategy is. If your size is small enough, you can survive long enough to kind of figure it out, which is the exact reverse of how everybody does. They always think, oh, I got this great idea. I'm gonna size up really, really large, large and in charge. And then then you blow up. So that's, I think, the first thing that you want to eliminate, which is, size really is much more important part. The second part is just, we're always taught to never quit, right? I mean, I always say, it doesn't matter where we are in the world. If we come from an Anglo-Saxon culture, which is the general broad culture, it's the Protestant ethic, which says you never quit, you never quit, you never quit, right? Quitters is for losing. But trading is exactly the exact opposite. Trading is the one domain where you need to quit right away. Quit and retreat is the number one thing you need to do if you want to be successful. You need to run away, which is just the exact opposite of all the testosterone fueled, ego driven trading that we all love to do. So that's a really hard behavior to learn. And we've created a little psychological hack. We trade lots of prop accounts, right? The great thing about, like, for example, trading with the guys at Apex, they have ridiculously big discounts. So you could buy like 10 accounts for the price of what one account would cost at any other firm. So we buy like a lot of accounts, and I trade multiple accounts, not in a trade copy fashion, which is how everybody does it, because that's just basically a way of blowing up 10 accounts at once, right? You amplify all your mistakes by 10 times. No, we trade 10 accounts in separate fashion. And to help me quit and retreat, if I'm trading 150,000 account on NASDAQ and I hit a losing trade, I literally switch to a different account. And then I'll look for the next setup in my other account. So the physical switch does two things. It eliminates further damage to the account that I've already just traded in, right? It also creates a blank slate. I'm not trying to win back money. I'm working a new account. And so psychologically, I'm in a much calmer state. So having this, switch and retreat function is really, really useful. So those are some of the techniques that we've started to put in. That's definitely help people with their trading.
Going into, I guess, prop firm trading, what are some of the things that you see people do wrong when it comes to getting funded, getting accounts they can trade with?
So it's a conversation we're having all the time now. A lot of firms make it very easy, not very easy, but certainly easier to get funded, right? You still, like 95% of traders fail to get funded. So, we have a really, really good methodology, and I had a great, sort of a great room where I think we're up to like 70% of all of our traders getting funded. But once you get funded, the game it's like going from the amateurs to the pros. The game gets much harder because the rules for funding become much harder. You have to trade smaller. You have to trade more tactically. And that's the next step. I mean, I think this is where a lot of traders are beginning to now refine their skills at the next level. How do I keep my account, right? Because the other thing is, evaluation accounts, when you have, like, as I said, you have like 10 of them, you could burn one to earn one. You could like sacrifice one account by doing large scale trades. And if they work, they work. You can't do that with funded accounts. You're just going to burn your accounts. You have to have a completely different mindset where the game there is to manage risk, irrespective of the game there is not to lose. It's not about winning. It's about not losing, because winning will kind of take care of itself. It'll take a little longer. You have to just be super patient. But if you're losing, it's terminal, right? You've lost your funded account. The other thing that we do is I make sure, I have like 8 or 9. Some of the guys in my room have like 15 funded accounts. That is very, very helpful because it goes back to that idea of switch and retreat. If I take a legitimate trade, I get stopped out in one account, I move on to the next one. Even if it's a legitimate trade, precisely because I don't need to fight that account. I don't need to fight that account into submission. I can trade the next account, and then I come back. Like I did this morning. We had I was trading $250,000 accounts. I hit a stop trade on the open, got stopped, went to the other, completely moved to the other account, went to the other account, really ran that account really nicely. Then came back to the original account in the afternoon, very fresh, mentally open, and ran that back up to its original value. So now I have two accounts at high value with minimal amount of psychological stress as a result of it.
What's the benefit for someone like you, 20 years experience in the market, to trade on a prop firm account? Why not do it with your own capital?
Well, I do both. It's a great question. I think most people really misunderstand the value of the prop experience. Most people think, oh, it's free money, right? It's cheap accounts. I can run it and gun it. And if I'm lucky, I hit the lottery and I'm going to get paid out 10,000, 20,000 a month because, I really ran my funded account well. And, we have all these stories of YouTube influencers, 90% of them completely fake and false, who just, inspire you to say, oh, look at this guy. He got $100,000 payout, which is probably the best use of airbrushed software in the world. The value of the prop account is that it's kind of like flight simulator. It's exactly like what pilots do. Pilots don't train on actual planes. They train on flight simulator, which is actually even better experience than real flying in many ways. And so the more trades you take in a prop account, the more discipline you show, the more technique you develop, the better trader you become. So I actually trade, my real account has completely flowered, has really, really bloomed after I became a much better prop trader, because the skills that I developed in prop trading have been used to a much better extent to my own account. I think ultimately what retail traders should mature to, when they mature to, is they become really good at prop. They get paid, they get to the funded stage. They maybe even get paid out a few times. And then they also transition to their own account where they have a little bit more flexibility with capital, but they've now learned these really, really great techniques. And it's completely different. People go to me, oh, couldn't I get this done on a demo? No, because the reason why demo doesn't work is because there is no payoff. And when there's no payoff, your mind knows that it's fake. When you're trading demo, there is absolutely no payoff at the end. So the mind knows that it's not a real experience, and you're going to act very, very differently versus a real experience where the capital on the line actually means something. If you make a wrong decision, it actually means something. On a demo, you're making a wrong decision, it means nothing. So prop, actually, in my opinion, is sort of like the greatest demo you could trade, because it's the true learning experience that everybody should have.
Do you trade your own account the same way than a prop account, or are you a bit more risky on the prop account in general?
No, I'm a little bit more risky on the prop account, of course. No, I'm definitely less risky on my own account. I mean, by less risky, I mean I'm a much smaller size. For sort of notional size. Yes, I'm less risky on my own account. But you also you learn all these techniques. Like even in my own account, I now have like 4 or 5 separate accounts. Simply for that reason, I want to switch around between winning, losing accounts. All of that really helps you. It also, by the way, if you're trading your own real account, if you have, imagine you have $50,000 in one account, 2 bad trades. We all know, we've been there. 10 large, boom, boom, boom. Nasdaq down 100. You're gone. Doesn't matter how much money you have. You're gone. You're gone in an afternoon. Now take that 50,000 and you subdivide it into, just for argument's sake, 10 separate accounts. If you beat one down, to the point of no return, you only lost 5,000. You still have the other accounts are sort of, you segregate yourself against your own worst impulses. So it's another reason, good reason to do that, to separate your accounts a little bit that way. I mean, that's an extreme example. I only have 2 or 3 separate accounts, which is all you really need. But it just proves the point. I think that you're trying to protect against yourself, who's the biggest problem that we all have in trading. Right?
I guarantee people in the comment are going to say, well, if you do that, then you make less money on your accounts because you split it into many accounts. So what do you tell those people?
Exactly. And you should be grateful for that, because if you wanted to make, because the more money you make on your own account is the more money you're going to lose. We all know that. The whole idea of trading is to trade for life, we all know guys who make $50,000 in a week and then you never hear from them again because they're all gone. One hit wonders is the story of this business. There are very, very few people that have been in this business for 5, 10, 15 years that can consistently extract money. And all those people, none of those people ever talk about making the most out of their account. They talk about controlling risk and making steady, consistent rates of return. And that obviously, involves all the techniques that I kind of talked about to help you diversify risk as well as structure. By the way, like the whole idea of separate accounts has another really interesting value. We all know, especially if you're trading stock, right now, there's really two instruments that everybody is trading: Nasdaq and gold. Right? They're both massively big trend trades. There's a lot of volatility. There's a lot of movement. Gold today was just like money, 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 money. But here's the problem: if you trade both Nasdaq and gold in one account, especially when you're doing lots of multiple setups, it's very, very possible that you could have like 4 winning trades in Nasdaq and then suddenly 3 losing trades in gold. And the account itself is either net flat or negative. And then you're pissed. Because you're like, I'm winning and I'm seeing no results. And that's very, very common when you mix and match instruments in the account, because it's almost inevitable that one instrument is going to destroy the returns of the other instrument. So if you're trading gold in one account, Nasdaq in the other, that creates that kind of a diversification and separation that really gives you much stronger confidence in all your executions. Because, if you're winning 3-4 in gold, you're not hesitant to go out there and trade gold today. And maybe, Nasdaq is not working and you just kind of leave it alone. You just drop it down. I mean, they both work today, but the point being is that we all know that sometimes one instrument is really great and the other one just completely sucks. And it's much more productive to just focus on that instrument. But if you have separate accounts, it makes it a lot easier.
You mentioned something about keeping the risk low on your trades. How do you find that balance of having the risk being low and not too low where you're like unengaged or like doesn't grow your account enough?
Yeah, the very, very, and this is a very rough formula. So, take it with a barrel of salt. The rough formula that I use, and we're going to use stock index futures as our metric. If I have a $25,000 notional account, right? Let's say my account is $25,000. The initial trade, I want to take the first number, which is 2 on 25,000, and basically use that as as a micro position. So my starting trade could be 2 micros on a 25,000. On a 50,000, my starting trade could be 5 micros. Now, again, I want to preface this by saying that I'm trading 5, 10, maybe 15 times a day for 2 or 3 points. So I'm not looking to, and actually, you know what? I'll take it back. If you're trading for 10 points or 100 points, that's still a good metric to use. I still think that that's a relatively good leverage metric to use. In the old days, people used to say, if you have a $10,000 account, you should trade 1 mini. So 1 mini S&P or 1 mini NASDAQ against a $10,000 real account. My structure is kind of the same. That's, so that's the formula I use. What is the notional? I take the first number of the notional and use that as my starting point for micros. So, I would trade 2 micros for 25, 5 for 50. And that seems to work. I mean, I'll be honest with you. Yes, on prop accounts, I'll trade up to 1. I'll trade 1 minis, which is 10 micros on the $50,000 account. So I'll go a little bit larger because it's my evaluation accounts. But on my funded accounts, no, I stick to that metric of like 2 and 5s, 100,000 1 minis. That kind of if you stick to that, it's almost it's very unlikely. I don't want to say it's impossible. It's very unlikely that you will blow the account at that leverage.
Obviously, you trade these funded accounts. You have fun with it for sure, which I definitely see. What's the next goal for you from this point? Like, what do you want to get to when you have these funded accounts?
We're gonna just run the funded accounts to payouts. We're gonna the strategy I'm trading seems to be working really, really well. It gets better and better every day because we see more nuance in the patterns. People chime in. I trade with a whole bunch of people all across the world. They sometimes provide a really good insight to it. I don't have any long-term goals. My long-term goal right now actually is to just continue the coaching. I absolutely love the idea of introducing. There's so many new people in the world who've never traded, and probably the worst thing to do is to introduce them to, hey, you've never traded in the world. Take $10,000 of your hard-earned money and lose it in a week, because that's really what happens if you want to introduce yourself to. We've all been there, right? We've all done it the hard way. And the proposition now is, hey, you've never traded. Take $100. Take your lunch money today and get a couple of prop accounts learn, trade with me for a couple of months, really understand the rhythm of the market, the nuances of the market, trade more, and then build up your confidence, build up your skills, and then get into the funded stage or trade your own accounts. And I think there's just a really interesting opportunity to teach a lot of people how to do this. I think it's in its nascent stage. I think there's 300,000, 400,000 prop accounts in the world against there's 25 million stock accounts just at Robinhood alone and Schwab alone. So, what I find is a lot of people who are also, a lot of guys who have a big stock portfolio and are investors come in, discover it, have a fun time, and then just, they really go nuts. A lot of ladies too. I find a lot of, we have a lot of ladies who just trade really, really well. I find it to be a really fun, rewarding game because it helps people and it controls their risk in a way that it's never been done before.
Tell me where people can find you and connect with you and learn more about the trades you do.
The easiest, I am always live trading on YouTube. I'm a huge believer that if you're going to teach something, you got to prove it. You got to prove it to everybody every single day in real market conditions under real prices. I despise every video on YouTube where a guy goes, look, I entered here and I made this money here and look how well it played. And then I'm going to play the replay function in TradingView. I mean, we can all play the replay function in TradingView and become the greatest trader in the world. I always say the only way you can prove that you're a good trader is to trade the future, not the past. I can trade the past better than any YouTube guru in the world. I guarantee you. I can be 100% with a 100-to-1 risk-reward ratio. It's super easy. Trying to do this in real life conditions on the future side, that's really the challenge. So I trade live every single day, usually 9 o'clock New York to 11 o'clock. Sometimes we do marathon sessions like 8 to noon. Sometimes we'll do non-farm payrolls, obviously. Any big events, CPI, non-farm payrolls, we're always going to do those. And it's always on our YouTube channel, BK Forex. So you can come subscribe or just, hop in anytime. And if you subscribe, you'll get notified, that I'm trading. You can also follow me on Twitter at FXFlow. And my stream goes live on Twitter the same time as I go live on YouTube. So that's the best way to kind of get a vibe of what I do, see if you like it, understand my indicators. I spend a lot of time. There's two things I do. I trade and then I develop indicators. One of the great things that has happened over the last couple of years is AI. And the ability for ChatGPT to be able to code for you. I've had to spend years, paying other people to code for me, and it's nowhere near as good experience because you never quite get the granularity, you can never quite get the details. So this has been an incredibly powerful thing to be able to create the indicators the way you want them exactly, and then use those indicators to make the trades exactly the way you want to make them. Into a very virtuous cycle, good indicators, good trades, clean profits. And then just rinse and repeat, do that over and over again. So that's what we do, all day long, every day. Plus, you get to hear me drop F-bombs every 5 minutes in my life.
Hope you like that interview here with Boris. A lot of cool stuff. There's some good lessons in there. Let me know in the comment section below the thing that stuck out to you the most, your favorite advice from Boris. I want to hear your thoughts as always. I'll read all the comments, answer most of them. And don't forget to grab our free training on the mindset of scalping, something that really goes into the psychology of being a fast-paced trader and catching these small moves in the market on the 1 minute chart or these kinds of time frames. I think that's really the next logical step if you want to become a good scalper eventually and you want to really master this stuff. So check out the first link in the description. It's going to go through that page to get the free training. As always, let me know your thoughts. Big thank you to Boris. His social media will also be linked in the description and you can find him there. And I'll catch you back here in the next interview pretty soon. Ciao.